investors, Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Now, outside of doing our regular updates, we love to bring on wonderful guests, and today we have nothing short of that. Quentin D'Souza, who is both an author and an investor. He's written a few books, The Property Management Toolbox, The Filling Vacancies Toolbox, and The Ultimate Wealth Strategy. He also tells us he's working on another one, all coming from questions he gets from many people around him on how do you do what you do? He's got a portfolio of over $25 million out in the Durham region east of the city. And he tells me he's got over 100 units rented. So he's a busy guy. And so he took some time with us today to tell us a little bit about what his thoughts are with everything going on in COVID and some of the things he's learned along the way of becoming a large scale investor in our region. Are there actually cash flow properties in our area, places you can make wealth, or should we just be sitting on the sidelines? Well, we talk about all of these things today. Enjoy. Hey, Quentin, how you doing? Thanks for joining us.
Awesome. I'm doing well. How about yourself?
I'm doing great. And I'm so thrilled to have an investor, a real life investor. We get a lot of people that come in and like kind of these outside areas that tell us a little bit about what's going on in the market. But it's good to have someone who has been doing this for, 15 years now you've been in this business? How long have you been doing real estate?
So 17 years.
17 years. Maybe for our guest's sake, you can tell us a little bit about your background, kind of set the tone for our conversation today.
Sure. I mean, I wasn't always in real estate. I've got a few gray hairs. So my previous life, I was a teacher. I worked in the Toronto board as a public school teacher. I actually worked as a consultant. I have a master's of ed. I was going down the path of becoming an administrator in the system. I have my principal qualifications. Was on the Sunshine List. And 2014, I was able to leave all that. I didn't want to get involved in that side of thing. I feel like it's middle management, and I just continued down. Real estate gave me the option to leave that position and focus on my real estate investing full time. So that was in 2014. So, I mean, my journey starts with like buying pre-construction houses all the way up to building my own properties, buying in the US, there's like just a lot of everything. But I think the key for me was having enough income that came from my portfolio that allowed me to actually leave my position in 2014. And since that time, I've pretty much quadrupled that from where I was before in 2014 to where I am now. So scaling wise, it's been really good. And I've just been able to focus more on my real estate portfolio. And I like to help people to take control of their financial future. That's the way I do it. But the way I'm doing it is I give you books. I write some books, you read the books. I can't handhold people. It's just not worth my time.
Maybe tell us a little bit about the books you did write. Give us the names. Tell us a little bit about what they are in case our audience is interested in checking some of them out.
Yeah, it's the Property Management Toolbox and the Filling Vacancies Toolbox. And they're very much focused on the practical aspects of getting your property management under wraps. I actually wrote it kind of morbid, but I wrote it because I wanted my wife to be able to handle this real estate portfolio after I'm gone. And I wanted to give her like a step-by-step, this is what you do, right? And so that's how the books are both written in that way. And the Ultimate Wealth Strategy is before everybody started to use the acronym BRRRR, right? We actually have been doing it well before the acronym became, an acronym. So, we called it the buy, fix, refinance, and rent approach. And I've been doing that since 2008. And just the same sort of thing, right? And so, I mean, like book wise, those are the three main kind of books that I focus on. I am in the process of writing one more, but I don't want to disclose it yet because I just finished the first draft. So it's probably a couple months away.
Good for you. Good for you. So maybe tell us a little bit about that journey, because I think most people that get into investing, really, they only have a few properties. We have a wide audience here, so I can't say that's for everybody. But maybe tell us a little bit about what were those steps, what led to the decision to leave full-time or where you were teaching, I guess. I don't know if you were a principal or in the education sphere and jump over. What was part of that decision?
Yeah, for me, it didn't make sense anymore. Like at one point, like I was making so much, this sounds so bad, but like I
We're
was,
all adults.
yeah, like the income that I was making from my real estate portfolio, it just didn't make sense for me to do anything other than continue to do that, right? At a certain point, from a like, why would I work, you know, 40, 50 hours a week, and then, when my portfolio was doing the same, and I was only focusing on like 4 or 5 hours a week on it, right? Like it just didn't make sense anymore. And
Absolutely.
by focusing on the real estate side, I could accomplish this, by working, let's say 40 hours a week on that real estate side, I could accomplish, a 4 or 5 times the income that I was making, and not have to work as hard. And so that really was it didn't make sense anymore for me. And I think everybody can do it. Like, I honestly, I believe that, people get led down the wrong paths a lot of times. If, okay, I'm going to be some little bit controversial here, but if every, financial planner and all of those people, if they were, if they were all so good, where are all the customers' yachts? Where are all the customers, Lamborghinis? Because obviously it's only them that's, driving those things. So, for me, I find that real estate gives me control over my financial future. And I think it can be that for other people as well, as long as you're buying right. And real estate is a great asset class. It doesn't have to be your only one, but I find that it's the best one for us to generate wealth in a shorter period of time. And I think that anybody can do it, right? It's just, having the right team in place to help you and have a good understanding of what the fundamentals are. So
Yeah.
it is good.
I get some viewers that have sent me content where they're like, well, what do you think about this? And the conversation is this idea that landlords are bad in some way because we're taking advantage of the poor tenant. And the reality is, however you look at it, we didn't create the system, and there's no question that the real estate system is the best one, or at least the best one I have found. So now let's get into, so we're going to go through real estate. This is our investment vehicle. How do I
Mhm.
find myself a good property? You've been doing it for almost 20 years now. What are some of the tools you have in your back pocket to find that sweet deal, whether it's single family, multifamily?
Well, so for, from my journey, I kind of started off with like single families, moved into like small duplexes, fourplexes, triplexes, and then up to apartment buildings where I'm focusing now. But I'm always looking for cash flow. So I only buy properties that are cash flow positive enough so that I can hold on to the property without issue. And so that has been my key through this whole time. I've been buying properties from Pickering out to Coburg, just continue to ensure that even when I'm buying an apartment building, and usually I'm buying an apartment building with a partner who's bringing the cash for the down payment, that we are finding properties that continue to cash flow. I just closed on a 7-unit property last week, and we're pulling, and this is a 7-unit property in Bowmanville, so it's still within the GTA, right? And we're cash flowing about $2,000 a month on that property, which is great, right? That will enable us to continue to reposition the asset. So we're going to be turning over, each unit that we turn over will be able to increase the rent $400 or $500, and in turn will increase the value of that property so that within 3 to 5 years we can refinance it, repay the initial investor, and continue to both own the property 50-50. So it's really like that's the process. And I think, having cash flow is really the key. Appreciation, you get wealth from appreciation, like, no question. I'll tell you that I've, like, in the last year, we've seen 20% appreciation. Okay. And that's, for me, I have a $25 million portfolio of real estate assets. You tell me what that means for my net wealth, right?
Did you quit
So
teaching?
It's not even close, right? So like but that's the difference, right? So that net wealth comes from the asset base, but the how you hold on to the asset base is the cash flow that comes from the property. And if you're always having to pay into the property to cash flow, then you're never going to be able to scale to that. You'll be able to do like maybe 1 million or 2 million, but you'll never scale because you don't have the debt coverage ratio. Your DCR isn't there in order to keep buying properties, and you're going to be capped out by lenders quickly, by banks quickly, and there's just no way to continue to hold it. But if you have a good cash flow on those properties, and believe me, in Toronto and in the rest of the GTA in Southern Ontario, you can find cash flow. The challenge is you have to work for it. And like, if you just want to like, just pick up, like go on the MLS and just pick something, that's not how you do it. It's not investing, that's speculating, right? So I don't speculate. I buy property that cash flows in good markets that are appreciating, and I get both cash flow and appreciation always. And I've been doing it for long enough that I know that you can always do it. People just make excuses, right? Like, let me give you a good example in Scarborough. So Scarborough is like, oh, it's Scarborough. It's not like the lakefront downtown. Like, but you know what? Scarborough is a great place to find cash flow if you can reposition an asset and take it from a single family home up to like a triplex, right? So you're taking it and the price point makes sense that, the dollars that you're going to get from income from those, from 3 units versus 1 unit will allow you to continue to own that asset. You'll still get paid every month and you're buying in Toronto, right? So there are lots of ways to do it. They're just not easy. Like, I'm not a realtor, like I'm not a mortgage broker. Like, I'm telling you as an investor who's been doing it long enough, is that investing requires work, and that's why I get paid as a joint venture partner, right? Like to be able to find these assets, because like that's it's requires work. A good realtor will always help you to be able to do that, right? Like, having a good realtor on your team is really important. So is a good mortgage broker. It's really important. And if you're not going to manage it yourself, an excellent property manager. Like that, those three people in your team can really help you to succeed in this business. And just find out other people who are using those team members in the area, right? Like, and they're successful investors. That's the other thing, right? Everybody's an investor, but doesn't mean that you're a successful investor. So
I love that. That's great. And it just goes to show there's obviously the truth to real estate being a passive investment vehicle. But just in this little conversation, we've realized that there's a lot of activity that can and should happen in order to get these properties to a higher cash flow amount, which we would obviously need to grow a portfolio. And that really is the summary of the BRRRR strategy. So this is great. Okay, so just to ask you now, we're going to kind of transition a little bit. You're quite involved in the market, and obviously you have millions of dollars to lose if things go down the toilet. So tell us a little bit about what your view is of the current market situation here in the GTA. What are you watching most closely?
Well, I think we have a real interesting temporary situation in the downtown core, particularly in the condo building market. I think that there's really a temporary situation that's kind of come to a big, I don't know what you call it, like a head, because you got the Airbnb law that basically, only allows for primary residence Airbnb, and you have all those units in condo buildings and other places that were specific for Airbnb. So you've got that glut that has come onto the market recently. And then you have people who are panicking because they were making $4,000 a month and now they're renting it at $1,650. And all of a sudden they're like, oh man, I can't do this. I got to put it on the market. So you're going to have like a lot more in specific buildings where you've seen that, these changes occur. So I think this is really a temporary situation though. So if I was in the position that I was interested in buying in this market, that's probably probably where I would see as an opportunity, but not as selling. I don't want to be selling in this market. But if you go outside of that, let's say into the suburbs, what you're seeing is a huge demand of people coming out of the core into the suburbs. And what I'm finding is that whereas some of the friends that I have who have condos in Toronto, their rents have gone down $300, $400, $500, $600. They have to do 1 month incentives, that sort of thing. My rents have gone up $100 after compared to last year from Pickering out to Bowmanville, right? Those rents have come up, and I found that the prices have just like you're getting 20 multiple offers on these things, and people want to move to those places, whether it's temporary or if it's, you know, just something that's cyclical. You know, it's hard to say, but I got to tell you, you know, those suburbs and those outer rings they're getting lots of multiple offers. Busiest August in history. You know, that's what it was, right? So it's pretty crazy for August 2020.
Yeah, and you were talking about picking up an apartment recently. So you're obviously
Yeah.
still buying out in the suburbs or out east of the city.
Yeah.
What's led to that decision? Do you anticipate prices will keep going up, or was it simply just a cash flow call?
So the way that I'm doing things is I'm looking for a specific cap rate. Actually, right now I'm in the process of purchasing I've got offers in on a 612 and I'm working on a 23 unit building. So I've got 3 buildings that I'm working on. You know, for me, I'm looking at the interest rate that I'm paying based on my 25-year, because it's commercial properties that I'm looking at 25-year versus the cap rate of the property and the spread in between. It's probably an easy way to think of it. So if I'm getting an interest rate of like 2% and my cap rate is like 5%, then I'm pretty cool with what's going on there. So for a lot of people, that's an easy way of thinking about it. I'm able to do that all day because I typically don't buy anything off the MLS, right? I'm very in tune to what's happening in my market, and I'm not a realtor. So like I'll work with other realtors who are interested in, you know, like I don't care if they make both sides of the deal. It doesn't matter to me because that's not my business, but
Right.
I am in tune to what's happening. And that's how I typically work on finding properties. People know who I am. They know that I'm interested in these type of buildings, and I often get brought to me. And then I'm working with my partners to make sure that the numbers make sense. And if they do, then we'll go ahead and continue to purchase. And I'm going to continue to do that until the numbers don't make sense, right? And I'm not buying like at 1 or 2 cap, or, you know, like not even 2 or 3 cap. That's not my thing. I'm looking for good cap rates that make sense to me and my partners. And, you know, I've got a track record, which, you know, I've been doing it for a long time, and, you know, we have over 100 units under management. So it's like, you know, it's a proven track record that I think will allow me to continue to do this for as long as I want to continue to grow, right? So it's
And
you
yet
know,
here
I
you
think
are sitting with me on a podcast.
yeah.
Thank you
Well,
for
you know what?
taking the time.
Because I really believe that everybody can do this. If you're determined enough, you're going to be able to buy a house, whether it's a principal residence or you go together with other people and you invest in a project together, and, you know, you can invest in real estate. There are lots of ways to do it. The thing is that the amount of the population that actually does it more than just their principal residence is very small, like 3% of the population, right? So, you know, there isn't a large group of people that do that. And if you can be part of that smaller group, I think you can do well, right? And I don't think you need, like, you know, 3 university degrees to be able to do that. I think anybody can do it. You just have to be determined enough and have the right people around you, you know. If start asking who and stop asking how. Right? Who, not how, right? Dan Sullivan, you know, he's a great man, a teacher of entrepreneurs, I would say. You know, he always says, you know, ask who, not how. And I think that's really, you know, if you want to invest in real estate, stop asking how I'm going to do it and start asking who's going to help me to do it. And I think that'll help you to get to that point.
So our audience is wide, and we have a lot of critics of the real estate market. And I don't think that's ill-founded, because if you think about the news that's come out, it seems to be quite negative, at least in the last couple of weeks. And we're doing this recording a few days before it goes up. So this is still very real, right? We've got the possibility of power of sales. We've got rental evictions confusing the world. We got CERB ending and EI failing, right? What is it all going to look like? And does this not freaking you out? Like, why are you buying properties?
Yeah, a lot of this stuff doesn't freak me out because most people don't understand the truth in the situation. They only understand what the media is telling them. So, like, for example, evictions. Let's start with that. And you tell me where you want me to go, but I have...
I want to go with evictions. Let's go.
Okay. So evictions, who is actually being evicted right now? You tell me, who do you think is being evicted? It's not the people who during COVID weren't paying their rent. I can tell you for a fact, it's the people who weren't paying their rent back in November and December. I actually have evictions that were going on from before that. So you're telling me that somebody who just decided that they weren't going to pay anymore and wants to live for free, it's okay in our society to be able to do that and put it on the back of somebody else? Like, what if somebody put a tent up in your backyard or on your balcony? Is that okay with you? So, like, obviously it's, there's a problem with the system when you're thinking that it has to do with just evictions. If like everybody during the COVID period and like we're a pretty good segment of the market, like everybody that we've worked with them to ensure that they were able to make payments. And none of those people are actually being evicted. None. In my case, in my experience, none of them are. The only people who are being evicted are the people the rent striker people who probably should have been smart enough to know that we live in a capitalist economy. Like, so, there's consequence to like not following the law. And then there, the people who are being evicted before and are still going to be evicted anyways because they're problematic, because they decided that not paying is the right thing to do. Which, I understand that. Like, I'm not left, and I came from a very left profession, so don't. I love all of this discussion around it, but I don't think they understand the facts around it. And I think if people understood the facts, they would be like, yeah, like if I buy a car and I don't pay for it, they're going to take their car back. Like, this isn't like, we all get the same car, right? And I think the other thing is that we have to appreciate what we have as Canadians. Like, I'm an immigrant. Like, what we came when I was 3. When we came, we lived in the basement apartment of somebody's house for I don't know how long, right? Like, we came here, and I really appreciate the freedom that we have in Canada. And I think we all have to remember, like, if you've come from Russia, India, China, like all of these places that don't have the freedom that we have in Canada, I think we have to appreciate that more and not try to be more like those countries where we tried to leave. So that's my, 2 cents around that, but whatever.
You jumped in one issue, but I think the general consensus among large investors that I've talking to many like you, is what do I got to be afraid of? Like, very much what you're saying. And obviously every one of these issues, if anyone listens to our podcast, they know my thoughts on it, but I just wanted to get your take on it as someone who has millions of dollar portfolio on the East End, what you would say looking at all of this. So is there any other thoughts like this, because you have really good conversations with, I know you were saying, Aaron, we had him on not that long ago, and He's got all of these assignment projects going on and the ability to, so there's a lot of people in critical moments, power of sales, foreclosures, divorces, right? And so that's all around you too. And those things, it's interesting to hear. That doesn't sound like it's freaking you out a whole lot.
No, I think you've got to look at history. Look back in the 80s when interest rates were 18%. and look at the actual eviction, like not the eviction rate. Now I'm still talking from the question from look at like the default rate for Canadians and mortgages and compare that to the US. We do not default on our mortgages like in other places because we have recourse mortgages in Ontario. The only province that doesn't have recourse mortgages is Alberta. And what recourse means is that if you don't pay your mortgage, I'm going to come after your other assets. You got a boat, I'm going to come after your boat. You have something else that I'm going to come after until you pay me. So it's a different mindset. We don't have jingle mail in the same way in Canada, which is like, oh, I'm not paying, you can take the house and then that's it. It's not how it works in Ontario. And you're not going to find that same sort of lackadaisical approach to this. Like, you know, you're going to be financially affected for a very long time if you don't pay. So you will always have people in divorce situations. You will always have people, because that is what society is, right? And you know, if somebody like Aaron can help them out of a situation, I think it's a good thing, right? Like, I don't see it's a bad thing, but like whether they're going to be more or less, there may be some more, but I don't see it being as a systemic, like more. Like a systemic more would be to me like 20 to 30% of people not being able to pay their mortgage. I just do not see that. We've had a stress test. That was the whole point of it. Like lending standards have gone up, not gone down. So I don't see that as the same possibility. And I think it's a bunch of, you know, there's a bunch of people who are pushing in that direction. I'm not a big fan, I've got to say, of Siddell from CMHC and his prognostications about the future. I mean, the fact that they're a government agency and they're predicting something like that makes me think that they have the ability to make change, and they shouldn't be pushing for one way or another. Right? They should just do what their job is, which is to help people to get into houses and get into housing. That's the job. That's the role of CMHC, not to decide on whether house prices are too high or too low, right? Or say that in the future house prices are going to drop. The idea is that, is that you should be trying to help people, especially people who are coming to the country, first-time home buyers, to get into houses. That's what you should be doing. Right? And anything else, I think, is just, influence into what may or may not happen, right? If we can all predict the future, then we would all be billionaires, right? But that's not how it works. And even governments can't do that. And neither can people. We can only use the information around us to make the best decision possible. And I think that's where I see real estate is still a solid investment, especially when, governments are printing money, right? Like, right. Do we know, like a lot of people don't know this, but quantitative easing has never been done in Canada until April 2020. It hasn't been done. So that means we've been printing $5 billion a week in Canada. Not been done. This is done in the US, 2008, 2009. We never had to do it. Now we're doing it. Why? Well, for me, what that means to me is that asset prices are going to continue to go up, right? And if asset prices are going to continue to go up, what does that mean for me? Well, it means houses are going to go up. It's going to mean businesses, the value of businesses are going to go up. Stocks are going to go up. It's going to mean gold and, other hard assets are going to go up, right? Because relative to the amount of quantitative easing that's happening, and, that means basically the banks need to lend more money. They're being pushed to lend more money. So that means that those assets are going to go up. So that's why I'm going to continue to buy as long as the numbers make sense. I always do a return on equity calculation on my portfolio every couple months, right? And I'm looking at so a return on equity calculation is basically, you're looking at the equity that you have on the property and what kind of return you're getting on that equity. As you get more equity in a property, your return tends to drop because the you're getting, you're paying off some of the mortgage and you're getting some cash flow in the property. But let's say, you start off and your return on equity is probably like 10 to 12% because you're highly leveraged and you've got, cash flow and mortgage pay down. At the end of the year, you may make $12,000, right? But if you have $400,000 in equity, right, and you're getting that same $12,000, you're only making like a 3% return. And that's what happens over time. So like what I do is I look to reposition my portfolio, take that equity out, pay the capital gains. I'm all for paying taxes, like not avoiding taxes, but paying your fair share of taxes, and then go reposition that into, a couple of other properties. So take that and put it into 3 more properties, and then, get 12% return again. This is the beauty of real estate. This is why like real estate is a great asset class, right? And you may have to change your, like where you're investing, but it doesn't mean that you can't have cash flow and appreciation.
Awesome. Wonderful. Okay. So we know real estate is great, according to this podcast. Okay. So someone is wanting to start out, right? I'm trying to figure out, where do I go, taking it all the way back and maybe even ironing out some of those kinks that you experienced when you started. What would be your advice to someone to just get into the market? What would that look like for a newbie?
Like, the best thing I would suggest is find places where people are meeting who are buying properties and figure out what they're doing first, right? Like, so like go to meetup.com, I think it is. This is a great place to find, Facebook has meeting like groups and stuff like that. Like find out what people are already investing in, listen to great podcasts like yourself, right? Like find out where people are investing right now and see if that's something that you want to do, like you want to replicate. Just make sure like there are the type of, like they're getting the results that you're looking for. So that's a good way of doing it, is just like, meet with other people, figure out what they're doing, lots of Facebook groups and stuff as well. So check out what they're doing, and then you can, find out, good places to start or where to invest. So I think that's definitely a good start.
Quentin, this has been awesome, and I appreciate all of your time. Where can our listeners find more information about you, maybe getting involved in some of the projects that you're doing?
I'm usually working with friends or family. You can reach me actually, if you're interested in learning more about how I invest, through durhamrei.ca or educationrei.ca are both websites that I host around the education side. I don't do coaching or anything like that. It's just not worth my time. But that's the best place to kind of reach me. And if you're interested in investing, it's info@durhamrei.ca, and just put like, partnering information, and we'll set up a call and see if we're a right fit for each other.
Fantastic. Thanks again. We appreciate everything you've given and all the time you shared with us today.
Yeah, no problem.